People that don't have debt will survive this, and it's a circular business, and everything will come back eventually, we hope. And we've been here before, and the strong and the debt-free will survive, and it'll weed out the weak links.
Now is the time to make sure that you're being as lean and as efficient as possible. And from my previous experience with oil and gas, right now is the time to really look at what your costs are, see where you might have built up, you might have had some liabilities. So go with your winners right now.
All the previous downturns have eventually ended, and that, the classic lessons of leverage get you in trouble, bad assets get you in trouble, and the people who are prudently leveraged and have the better assets survive, because this is, at least in my career, the fifth 50% drop in oil price in the last 20 years. So this feels the worst, but they always feel the worst.
You look at all costs. You reduce travel costs, you reduce the number of people that you're sending to different trade shows, even like this. But there's maybe other things that you look to do. Job sharing is some things that are maybe opportunities. Not all companies can do that, but it's a way of preserving your mental resource or your human resources, that you have to have that capacity when things return.
Efficiency, and I think the big thing is that certainly in the Bakken we had a huge inflationary aspect, kind of a premium on all aspects of the business. So I think that's going to have a correction, and the economic focal point of the Bakken is going to be lowered. So I think that there's going to be a lot of cost savings, and certainly we're all about trying to save a barrel every day.
Cutting costs on office space and campuses, cutting unnecessary travel. Unfortunately, cutting the budget where necessary on personnel, but essentially going through expenditures from top to bottom to identify things that aren't adding to the bottom line and eliminating them.
I would be looking for acquisitions, but you'd have to be nimble. You'd need to get into the best basins. You need to be patient. You probably ought to be able to pay a premium if you can maybe offer some of these distressed companies that don't necessarily want to give up their assets at today's price deck, but need to sell something. If you can offer them some upside, some type of a price kicker, you might be the winning bidder.
We're in Midland right now, and I would probably be looking at purchasing some minerals out there. There's a lot of potential still that's not been developed, and drilling a well at $7 to $10 million out there for a horizontal well, that's still pretty expensive. So the less you could do of that and the more you could do of actually owning the land out there, that's probably where you'd want to put your money.
I'd retire and go to the Bahamas.
We really just don't have the room to make mistakes, right? So people need to be really careful about where and how they get their information that they're going to use to complete and drill a well.
We're facing a little bit of political stability. Who's going to be the next president here in the U.S.? And that's a little disconcerting.
Finding the real dawn from the false dawn. If oil is going to go up above, now above 30, is that exciting? Is it above 40, is that exciting? It can come down again. So I think it's when is that really the market's tightened up, and when is it just sort of a trading rally?